Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Trading Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. It is the 4th of July and perhaps in some ways the US president couldn't have asked for more because it's almost a perfect backdrop for the US market. Is that going to give enough ammunition to the bulls here back home to get their mojo back or not? We'll discuss this, all the cues and news that matter along the way. I'm Surabhi Upadhyay, with me Mangla Malu and Rima Tendulkar. Hi guys, morning.
Hi, 4th of July, and for the US, fresh highs on the S&P, Nasdaq, and that big, bold, beautiful bill is soon going to become a law. But back home, just looking at Asia, there appears to be a little bit of caution.
Well, there is a little bit of caution. We'll see where that goes. And yesterday, we saw that last hour decline on account of expiry. The question is whether that gets adjusted today in the first hour or not. But speaking about the first hour and last hour, I'm looking at the test match.
I knew you'd say that. I was wondering, no, you were not looking at US markets.
I mean, I was looking at the US markets, but then they were doing what they were doing, right? You watch the Indian markets, you watch the Indian batters, 259 for Shubman Gill and then Akashdeep coming in, taking quick wickets. We're poised for a good game. Let's see where that goes for both markets and the Indian Test cricket. So far, so good.
Good feeling this Friday. We'd perhaps say that. So let's get started and tell you about all the key cues. So like we're saying, the big headline is the big, beautiful bill, but I'll come to that a little later because the trigger for the market, which shut a little early for the 4th of July holiday anyway, was the fact that the jobs report is way better than expectation. And that's what led to record highs for these two indices, the S&P 500 and the Nasdaq, once again galloping along. So we've got about a gain of, almost 1% on the key US indices. Coming to non-farm payrolls now, the estimate was 110,000. The actual number came in even higher than the May number at 147,000. So looking very good. The unemployment rate actually ticked down as well from 4.2 to 4.1%. Now, as a result of this, equity market surged, but there was some unease in the bond market. Yields marched higher, almost 5 basis points higher on the 10-year, almost 9-10 basis points higher on the 2-year. Because with this kind of a jobs report, the market is now scaling back its expectations of a Fed rate cut, at least in this meeting, in the July meeting. If you look at the CME Fed Watch tool, then it's suggesting that there is a 95% probability now that the Fed is going to stay pat on interest rates. So that's what the big headline was. In fact, this jobs report also pulled up the dollar. The dollar index in intraday action had hit a level as high as 97.20 thereabouts. This morning, let's see where it is. It's still above 97. So pullback happening on the US dollar as well. Now let's talk about this big, beautiful bill. It has become a reality, and that's what the US president wanted. He wanted to sign that into law on the 4th of July, on Independence Day, and that's what will happen now. The passing majority was fairly narrow, must point that out as well. It was 218 votes in favor and 214 against. 2 Republicans voted against the bill as well. So it was not without its share of political drama. We know it's going to add about $3.3 trillion to the US budget deficit. And there are big sort of tax cuts, tax extensions, big deductions as well, and the very contentious, clawback from the tax credits that EVs were getting. That was, of course, the big talking point as well. So that's the big, beautiful bill. The other positive news came in the form of Apple. I mean, just giving you a sense that corporate America is chugging along. Apple finally saw its China iPhone sales rise by about 8%. And it's the first time that this has happened in the June quarter in the last 2 years. So if you're looking for more incremental positives, there were plenty in US market action yesterday. So all in all, looking pretty good. Now, will all of this translate into buoyancy for our market? That's the question, because global cues have been actually fairly all right through the week. Yet we've spent the entire week in consolidation. The Nifty has been a very tight, trading band of about 250 basis points. We're at the lower end of that trading band as we speak. The upper end is, of course, 25,650 thereabouts. So can we get back to the highs, at least, of the trading range today? Let's see. We'll find out. Going forward over the next couple of days, I just want to highlight a couple of events that will drive market action. Maybe it's the calm before the storm, you can say. And why do I say storm? There's earnings season coming up. Obviously, clarity on overall global US tariffs beyond Vietnam, clarity on the India-US trade agreement as well. And let's not forget the GST meeting is going to take place in July as well. And that perhaps is a big event that markets will watch out in case there are meaningful changes in the slabs themselves. I want to just end with a lookout to defense stocks. Watch for all of these because yesterday the Defense Acquisition Council again approved proposals worth a massive over 1 lakh crore rupees is what we're talking about. So maybe some of the stocks will perk up. They took a bit of a breather. So watch for this. Momentum is anyway on the side of the defense names. And they're looking at procurement of all kinds of systems and armored recovery vehicles, electronic warfare systems, surface-to-air missiles. So the whole gamut. So watch for defense, perhaps an interesting area to observe today. Rima.
Indeed. So take note of the defense news and the stock price action today. But the action is warming up, right, in individual stocks and stories. But quickly, let's pull up Asia because the Korean markets and the Hong Kong markets, that's Hang Seng and Kospi, both of them are down nearly 1.5% as we speak right now. And there are cuts even in the others. The Taiwanese markets is down more than 0.5%, and Nikkei too has a red tick. The GIFT Nifty for now is on the flattish side, but this whole week, markets have been extremely range-bound but resilient. The Nifty is down about 0.9% week to date, but mid-caps managed to buck the trend with a gain of close to about 0.5%, and we've oscillated. The Nifty at least has oscillated in a very tight band. So on the way up, it's the Monday's intraday high of 25,670, and on the way down, it's that 25,378, which was the intraday low, and it pretty much ties in with some of the moving averages. The 10-day simple and the 10-day exponential moving average is at that 25,350 mark. In terms of flows, the DII's bought 1,333 crore in the cash market. The FI's net sold nearly 1,500 crore. They've been selling through this week. In terms of individual stocks, it's Marico. We'll discuss all of these in greater details, but just to quickly put the snapshot, the India volumes have hit a multi-quarter high, revenue growth in low 20s. Bank, some of the updates have been a bit disappointing. So for Bank of Baroda, the loan growth and the deposit growth has declined on a quarter-on-quarter basis. Bandhan Bank, again, the loan growth has fallen 2.5% quarter-on-quarter. RBL Bank, Yes Bank, again, the updates from some of the banks have been on the weaker side, but NBFC updates have been encouraging. So Bajaj Finance, for instance, has reported an AUM growth of about 24%, and L&T Finance too is ahead of expectations. So action is warming up over here. It's a Friday. The trading week is drawing to a close. Mangalam, what are you looking at?
Well, I feel a lot better in today's trading session than what one would say in the last hour of yesterday's trading session. And the reason why I say that is because yesterday's last hour decline seemed like it was largely on account of options expiry day. Why do I say that? You know, if you look at the intraday chart of the Nifty, the bulls were hoping for that 25,500 mark to hold. It wasn't holding for a while, and thereafter, towards the last hour, we saw all those put writers run for cover and then throw in the towel. And if you look at not just the Nifty, the two biggest components of the Nifty, we had Reliance as well as HDFC Bank. Both of them saw a big decline only in the last hour, telling you that a large part of the last hour move was expiry related. Now, if you look at the GIFT Nifty is indicating a flattish start, the first thing we'll be looking at is will Reliance and HDFC Bank undo some of the big gash that we saw in the last hour of trade yesterday or not. And the other part is that the US markets, they're shut in today's trading session on account of the Independence Day, which implies that when the cat is away, do mice, the domestic mice, play? We'll watch out for all those small and mid caps as well. But the FIs, they're selling in index futures, lock, stock and barrel. Yesterday, they sold about 2,400 crores, unwound about 6,000 longs, added about 6,800 shorts. And just to put things into perspective, over the last 3 trading sessions, the FII longs have dropped from 37% to 29%, and the net exposure on the short side has actually doubled from around 38,000 contracts to 62,000 contracts itself. But be that as it may, for all its volatility, the Nifty is holding on to its lows. Yesterday's low of 25,384, pretty close to the previous trading session's low of 25,378. At the higher level, there is supply, 25,600 thereabouts, because that's where the highs have been contained over the last 3 trading sessions. So the Nifty day's high for the last 3 trading session comes up for you. The street does not believe that this range is likely to break out. At the lower level, 25,400. At the higher level, 25,600. So this 200-point range is what everyone's betting for. Small and mid caps are the ones that I'm talking about. We'll keep an eye out on largely because domestic money will be at play today. And the other large index that may be in focus is Nifty IT. Because even if the Nifty is about 3% away, the Nifty IT is 16% away from its highs. Trump's spending bill being passed, stronger US economy, Q1 results soon. All of these factors should work for the IT stocks. And that's something I'll be watching out for.
Okay, all right, Mangalam, thanks very much for that. So we've discussed all the usual cues and laid them out on the table for you. But let's also not forget that there is a big regulatory order out there, and it's the Indian market regulator that has completely cracked down on Jane Street. And this is after months of analysis, even discussions with the Jane Street group. Finally, what SEBI is saying is that Jane Street has to be completely stopped from all action in the securities market. In fact, banks have been asked not to do any further debits with entities associated with Jane Street. Not just that, Jane Street has to give back that big amount. That's close to $500 million, over $500 million, almost 4,900 crores. This amount has to be impounded from Jane Street. SEBI's contention has been that it gave enough time, in fact, even a warning in February to Jane Street to desist from undertaking any activities which were in violation of securities laws. But it seemed that this remained unresolved, and Jane Street and its associated entities were still taking very large cash-associated positions while dabbling, of course, in the options market. And this goes back to an earlier episode where there were talks about market abuse, market manipulation as well, perhaps, especially on expiry days when it came to very large positions in the options side of the market. We'll be discussing this with experts. We'll get Anuj to join in as well. But, this is a very strong message to all the large algo trading, institutions out there that market abuse or any sort of market manipulation will not be tolerated. And remember, the exchanges were a part of this investigation. The NSE had been asked to submit its report as well, which it did a couple of months back. And after the NSE's submission, a warning was given to Jane Street in February. Clearly, that didn't prove to be enough. And finally, there is this complete cease and desist order that's now coming from the regulator.
Indeed, one of the biggest crackdowns that we've seen on algorithmic and high-frequency trading in the history of India. We'll discuss that in greater detail.